Hello, future billionaires. This is the Invest Like a Billionaire podcast, and we've got a great show for you today. We brought on our good friend, Ryan Gibson from Spartan Investment Group. We've known Ryan for several years, and
super sharp
the team over there, we really just enjoy them. And we do something a little bit different on this podcast. So one, we're talking about self-storage, and that's the asset class.
Which
Spartan.
is not boring.
Not boring, apparently.
It's awesome.
And you'll hear about all that there. And then we kind of shifted gears and talked about a kind of intimate event that Spartan's hosting and that we're the exclusive sponsor of.
Yes,
and
we're super pumped about this.
We're really excited about this.
Get a chance to meet you all?
Yeah. So we have this little event up in Lake Tahoe, California. We'll be there in person. It's a very limited number of seats. So if you are interested, we have information on how you can sign up for that. We'd love to meet you if it sounds interesting to you. And so we talk about all that. And we obviously love that you guys are listening to this show. And if you are enjoying it, please subscribe, leave a review. It helps us continue to promote this to more people, and hope you enjoy the show.
Let's dive in with Ryan.
This is the Invest Like a Billionaire podcast, where we uncover the alternative investments and strategies that billionaires use to grow wealth. The tools and tactics you'll learn from this podcast will make you a better investor and help you build legacy wealth. Join us as we dive into the world of alternative investments, uncover strategies of the ultra wealthy, discuss economics, and interview successful investors. Welcome back to the Invest Like a Billionaire podcast. I am your co-host, Ben Fraser, joined by fellow co-host
Bob Fraser.
And today we have a really awesome guest, Ryan Gibson of Spartan Investment Group. Ryan,
this is
awesome
be
to see
so
you.
Good. Yeah.
Hey guys, thanks for having me.
Yes. So if you're not familiar with Spartan, I don't know what rock you've been hiding under, but these guys are awesome. They manage a lot of assets and funds in the self-storage industry. And we've actually invested with them and have really just seen their incredible growth. They are, buying a lot of assets, and it's a great time in the self-storage market.
And fell in love with an asset class that I didn't understand.
Right.
That's the most boring thing. I mean, self-storage, it's so, uninteresting, but it's not.
It's not.
It's amazing.
That's what makes it awesome as an investment, right? So we want to bring Ryan on, just kind of get a state of the market and kind of hear from them what they're seeing. Obviously, with some big changes in recent months with interest rates climbing, fears of recession looming, wanted to hear what they're seeing. So
we jump in. We haven't really talked a lot about storage. So just give us the kind of the 101, right, of storage. Why is it so great? I mean, I was alerted because it did so well through COVID, right? Self-storage. And so just give us the 101. What's great about self-storage, and why is it the best place to stick your dough?
I think it's the best place because it depends on life events. And when life events happen, self-storage is a beneficiary of that. And when COVID hit, that was a great example. Everybody moved, everybody resigned, everybody moved into an RV and traveled, or people moved across the country, or decided that they didn't need to work in a downtown metropolitan anymore.
A place to put their junk.
Yeah, but they had to get going. So places filled up, and store occupancy increased, and likewise rental rates increased significantly. And so we've seen that play out over the last 4 or 5 recessions.
So life events, which are always happening, create a demand, and then so talk about some of the other benefits. Just bullet points. So the rises inflation. It's very adjustable to inflation, right? It's easy to evict tenants. So give us some of these other.
Yeah. So
items.
I would say when we have 30-day leases, we can adjust the rates on our self-storage customers every 30 days versus every year, or if you're in a longer triple net lease or industrial lease, might be 20 years or 30 years.
Agile and flexible on what you want to do.
Absolutely. And so as a small example, we just increased our rents about 25% across our portfolio.
Wow.
Effective September 1 and October 1. And the reason why we could do that is because everybody's on 30-day leases and we can adjust to the CPI. So as consumer price index goes up, we can match that with our interest rate. So we have a really good opportunity to hedge against inflation.
And if somebody's $70 bill goes up to $85, it's not a game changer, right? For a person.
Right.
So
Yeah. And what's great is we're identifying assets that where the market's already charging $90 or $85. So when we buy our facilities and they're at 70, we can just simply bring them up to the market rate and add value just by charging what everybody else charges.
okay, and because this isn't a place that human beings live, or they shouldn't, right, then generally you have, it's easy to get rid of non-payers. So talk about the laws there.
Yeah, so really there is no eviction moratoriums or restrictions on what we can do. We're governed by state law, but that lease provision allows us to evict the tenant usually within 30 to 45 days. So that
Wow.
second paragraph in a lease says the owner has the right to lien the occupant after 30 days of non-payment. And so
Wow. You lien the contents of the goods.
that's correct. Yeah.
Wow. So it's like
And
storage wars. So you actually let this stuff go to bid and that kind of stuff. Is that real?
yeah, kind of. So the in-person auctions aren't really, unfortunately, Bob, the in-person auctions
Oh.
are not really a thing, but we can we do it all online now. So if you go to storageauctions.net, put in your zip code, you'll find, local auctions in your area that you can get alerted to, but it all happens from the comfort of your own home. So
Yeah, we just gotta check that out. Sounds fun.
Wow. Yeah.
yeah.
It's like a gambler's dream,
Right.
There's some
Yeah.
boxes in there, So it's such a cool business. And what was the other? There was one other major thing. So the operating costs, right? So think about it, right? You have 1,000 tenants, maybe, right? And what does it take to actually operate one of these complexes?
Yeah, so we see typically one employee per store at the most, maybe two if it's a quite a large facility, but generally it's one employee that can be as little as part-time, 10 to 15 hours per week on some
Wow.
stores. And it's easy to operate. We have the ability to have our systems shut down a gate when people don't pay after 3 days, so we don't need
Wow.
anybody there to manage that. And
So it's
then
really
again,
highly automated anymore. And so can people actually rent online or on a kiosk or something like that? Little app,
yeah,
that kind of thing?
yeah, yeah, people can rent on the kiosk, which we define as your smartphone. So everybody's got a
You're in. I have one. I'm a built-in kiosk.
exactly, yeah,
It is
24 hours a day.
so
Yeah.
it's really like a perfect investment in a lot of ways, and it's weathered so many of the downturns and everything else. How much of this stuff do you have now? I mean, it's getting up there into the many zeros land.
Yeah, so we have about 25,000 units, and we have just over probably about 3.5 million square feet of self-storage. Specifically, we just got named the 40th top operator in the United States by ISS. So quite a lot of it, and we really love the asset class, and this is what we've been focused on
That's
almost
the only thing you
exclusively.
guys do. So you really have become experts at storage. So, all right. So there's the 101. What's the 201? So what's happening now in the storage world?
Yeah, so we just did a blog on self-storage REIT performance. We track the REITs. We track the REIT data as kind of leading indicators for where the industry is going and sort of how the industry is doing overall health-wise. And I get a lot of investor calls that talk about, I see these things popping up all over my neighborhood and they feel like they're being overbuilt. But the reality is, on a macro level, self-storage, same store, same NOI growth has been over 20% just in the last quarter for the REITs, and they continue to experience the highest occupancies and
So
the highest
NOI,
rental rates.
for those that may not know, is net operating income, and that's how much earnings are being earned by these things. Has grown 20% over the year, which is insane.
And that's after expenses.
That's
Yeah.
after expenses. Yeah.
That's correct. Yeah. And we project anywhere we underwrite 3 to 8% growth in a given year, so you can kind of get a sense of just how much they've really exceeded their expectations and their forecasts. And every time the REITs put out a kind of a unrealistic forecast in our minds. They just like double their forecasts. So, we're seeing even more move-ins and more rates. And really the 201, I think, is construction costs have gone up so much that we're
Right.
actually seeing a significant slowdown in how many new developments there have been. And really the sweet spot that we play in are the tertiary markets, within an hour or an hour and a half outside of a major metro, where there really isn't the justification for a brand new facility, but you can take advantage of the high occupancies of the existing facilities. Yeah.
That's interesting. I mean, one of the things we've talked about a lot on the podcast is just what we're seeing is kind of a key tenet of, what's going on in the economy is inflation, and it's here to stay. And, the longer that we've kind of seen this post-COVID world play out, we think it's going to be, an element of our world for some time to come for a variety of reasons. But, to the earlier point, one of the most inflation protective assets there are is storage because of its, how quickly you can raise those rents to CPI and how really price inelastic it is, right? Because you're only charging, 50 to $100 per unit, 25% increase. Well, that's a big percentage. It's not actually that large of a dollar increase, right? Which is what's so cool with that. And it's interesting too, as you're kind of navigating this time, obviously, you're seeing some softening in the prices and the valuations of these assets. But at the same time, you're seeing really strong NOI growth, and NOI over time will translate to higher value, right? Because, if we've talked about this before, how, the value is dictated by your NOI divided by the cap rate, and what the cap rate is kind of that, price to earnings ratio, so to speak, of what you're willing to pay for that NOI. And a lot of times that, can go in tandem with interest rates. So as it's going up, cap rates are going to go up, which is going to hurt values a little bit because it's your borrowing costs are more expensive. But if you can weather the storm or you can ride through it as those cap rates kind of come back, but you've captured all this NOI growth over the past few years, well, that's a really good situation, right? Where you've kind of grown through it, and now all of a sudden that dollar that you've brought to the bottom line through revenue increases and expense management now is worth more than it was even before. So you guys are well positioned. What are you seeing just from kind of the interest rate environment? And, obviously one of the big things that seems every other headline is talking about is there's a recession looming and all these kind of things. And we have our own opinions on that, which we share a little bit. We'll share more. But what are you kind of seeing as far as, what's the market like? Is trading totally stopped, or transactions still happening? Are the debt markets, freaking out?
Absolutely, they are. Lending is slowing down, and even some of the acquisitions across the industry are slowing down. But we're not really seeing any cap rate expansion per se, but we are seeing a slowing down of buying and a slowing down of transactions across the industry. And that's because banks are, they're jumping on the brakes, I think, just in general overall. But what we continue to see is rising occupancy and NOI, like we mentioned earlier. And what we're seeing is an opportunity to sort of buy something for a discount based on where the yield curve is and where the interest rates are. And so if that changes in a year, or rates go down, or even a couple of years from now, we could be really locking in some discounted properties based on the future potential of interest rates. So we're seeing opportunities to buy some facilities still, even in this higher interest rate environment, that cash flows that may have a potential to be even worth more than what we're underwriting it today, just based on the fact that, we're building in that higher interest rate on our valuations and our decision on how much we can pay for a property. So we're not buying as much as we had planned this year, but we are finding some really great opportunities.
So you're seeing it as a really good timing for storage right now. So you're saying, if I'm translating this right, you're seeing the high interest rate environment is creating softness in pricing. So you're able to basically get these things at a good price. And I mean, I don't know if you're seeing much of this, but we are seeing other deals falling out of trade, right? Where because of interest rates changing the dynamics, and then buyers are simply backing out of deals. So you're seeing softness at the same time. record NOI increases. So the earnings are actually increasing at these record paces, which is good as long as, even if you overpay for an asset year one, but if that NOI keeps growing, you're going to grow right into it, but you're not even having to overpay. So it's best of all worlds. So it sounds like a really good time, and then kind of protective future, because you're seeing the new development, new product not coming on board because of high construction prices. So kind of sounds like a real sweet spot. Is that right?
It really is. Yeah. Obviously, as we all know, the interest rates are higher than the worst case projection that we had last year. But really, we've kind of pivoted it, like you said, into an opportunity to pick up some great facilities that have had tremendous growth. And, I think, Bob, one thing I didn't mention in the beginning was most of these facilities are still owned by mom and pops, 70% to be exact.
70%. Wow. So it's a
the
highly fragmented industry.
highly
So
fragmented.
how does that
Yeah.
create opportunity?
I think what really drives the opportunity is mom and pops, when they built their facilities, 30 or 40, even 40 years ago, they had a very low cost basis. Construction costs were a fraction of what they are today.
Right.
Land values were a fraction of what they are today. And they really stumbled into this high cash flowing business. And the focus of a mom and pop is to fill up their facility and keep it 100% full. And now that they've sort of matured and had their facility for 30 or 40 years even, their goal is, I don't want to do anything. I just want there to be a wait list and the place to be 100% occupied. There hasn't been any optimization for revenue management or rent increases or marketing or anything that we typically
Probably
do.
even technology, right? And
Yeah.
all that.
I have a great story. So we bought a facility from this guy in his mid 80s, really great guy. And he was doing everything cash only. He was handwriting all the leases. He was there at the property every single day. Really, really loved his business, but that's how he did it. Yeah, there was no internet connected to the project to the facility. So it was funny.
Did you explain to him about the internet?
Yeah, well, we connected the internet to the property after the purchase, and he was highly, highly doubtful. But it was funny. One day he walked in and he was looking over my shoulder, and he was looking at our desktop, and it shows all the units laid out on the map, and who's paid and who hasn't paid. It's all color coded and everything. And his mind was blown. He's like, "Oh my gosh, if I would have done this before." Yeah, and so I think there's just a different focus, and and then when we come in and we say, "Hey, we can pay you this much for your property," their minds are blown, because they have such a low basis. They never thought it would be worth what it's worth today. And what we see is the opportunities to just simply bring the rents to market, put a little bit of revenue management in place, and really just
That's awesome.
squeeze all the drops out. Yep, exactly. So,
Well, good stuff.
Awesome. Well, Ryan, I did want to shift the conversation a little bit, because one of the reasons we wanted to bring you on, aside from just
This
kind of
is so
state of the
exciting.
market, is
Dude.
is this Spartan Investor Summit in Lake Tahoe, California. It happens to be your background, so if anyone's watching this, you probably been scratching your head here. What's this all about?
why is he here?
Yeah, tell us a little bit. I mean, this is something we haven't done before on the podcast, or like promoting an event, but when we kind of heard about it, one, obviously we're going to be involved in it, which we're excited about. But two, it really seems like it fits a lot of, what our listeners and our, the investors that listen to this podcast would really benefit from. So we wanted to kind of bring you on, talk a little bit about this kind of intimate event, and share a little bit about what you guys are doing. What was the kind of genesis of this brainstorming of this event?
Yeah. So we've been dreaming about this for years. And what we wanted to do is put together an event that's small, that's exclusive, that's limited to just 50 people. And we wanted to do it in an environment where it was fun and relaxing. So the landing resort in Lake Tahoe is where we're going. And it's open for investors, your listeners, and anybody listening to this event. But really what we wanted to solve is, we wanted to, instead of having a conference with hundreds and hundreds of people, or even thousands of people, where you don't really get to know the speakers very well, and really kind of lay out your strategy. We wanted to limit it to 50 people and bring together the best people that we know in the industry on the economy, tax, legal, investment, people who have built billion-dollar businesses and sold them, and let those speakers really get to know the audience and build a tribe of investors that can come away from this knowing, kind of walking away with 50 other attendees as friends and colleagues that they can call on, but also having the speakers and their knowledge kind of play out in their investment, day-to-day investment strategies. So I'm really excited about it. Ben, I know you and I had sat down at our kind of our offsite, and you were Aspen Funds was top of mind in being an exclusive sponsor to this event, because I think you guys have a lot of alignment in trying to provide as much value to your investors as possible. And this event really hits home for that.
Wow, sounds so perfect. I mean, I love that concept of a, small group. I love those small intimate meetings so you can really build the relationships and get to know one another. And so much of the problem in the investment industry is it's too cookie cutter. Everybody's trying to make cookie cutter approaches for everybody, and the truth is it just doesn't work that way. And so you have a unique situation, and so you're really designing something to build relationships and to gather input. And the thing I was thinking about, okay, so you've just sold your business and you got a chunk of change sitting in your pocket. Do you want to just hand it over to a guy with his name on the top of the building, and he's going to tell you what you're going to do with it? And 60/40 portfolio, and the stock market's always the place to be. Or do you want to get involved? Do you want to actually get involved? Do you want to learn something? Do you want to be good, just like you were good at your business? Do you want to be good at being an investor? Of actually, you're vetting the deals, you're understanding the deals, you're involved, and not meaning you have to, you know, you know, make the phone calls and heavy lift anything in the business. You're a passive investor, but it's making the calls, right? Of your allocations and what kind of deals you want to be in, those kind of that's really the kind of person you're after, right? I mean, it's the way we all are managing our own money, right? We're not just sitting back and a guy who's supposedly smarter than us all is telling us where he's gonna put our money. Who wants that? Is that right?
That's exactly right. And and why not do it and have some fun and meet mingle, right? And so that's kind of why we picked Lake Tahoe, because it's a great time of the year and we have all these activities planned.
Just a question, is there any water in the lake?
Well, you better act fast because this might be the last year.
Okay. Now, I know you're a pilot. You're actually a commercial pilot. So, I'm in if you're going to have a seaplane there,
Okay.
Oh,
all right.
Come on,
all
man.
right.
That's a secret. That's a bucket list, Bob Fraser bucket list deal, is
Go
trying
land
out
it
some
on the
wings, man.
Yeah.
All right,
One of
Bob,
the
you
things
got it. I'll be there with my seaplane. No problem.
Seriously? No, come on. Really? Don't tease me.
You'll be flying it'll be the day after your check ride, so you'll be flying in your own plane.
Yeah, my baby pilot's license.
Yeah, I probably won't fly with you on that one. The first one.
Chicken.
You'll be fine. You'll be fine.
It sounds so amazing. It really does sound like a blast. And
Well, I think one of the things that we're seeing, as we talk with a lot of our investors and just this whole growing movement with, the Jobs Act kind of starting this whole movement towards private alternatives and access to more private alternatives, we're seeing a lot more do-it-yourself investors, if you want to call them that, and, Bob and I were just at an event a few weeks ago, and the whole point was, defending the do-it-yourself investor and basically getting involved, getting your hands dirty, and not dirty with, the properties or the assets themselves, but doing the due diligence and finding the right partners to place your capital with, but not just blindly trusting, a financial advisor that probably has a net worth, a lot smaller than yours. And, they've just been trained in this certain regimen of the sales process it doesn't fit, right? And so there's this kind of growing movement, but the biggest challenge and limitation that these investors have is resources, is trust. It's finding the right people to partner with. And you can go it alone, but you're going to go a lot farther if you find the right people, if you go together with the right people. And so one of the things I love about this, and it's fun because Ryan, you and I are in our own little mastermind, and I've gotten so much value out of that, and just how you guys are growing and how we're growing, and what are the things that we can learn from each other, and constantly sharpening iron. I think it's the same thing in this more kind of intimate environment where passive investors get to do the same thing, right? You get to talk and build relationships with people that are, learning from their experiences, from their mistakes potentially, and you can shortcut a lot of the heartache and the pain, and to get to your end goal a lot faster by getting this kind of mastermindy environment, right? It's kind of a term that's maybe overused sometimes, but I truly feel like this is going to be that, because you get to build the relationships, you get to hear from experts, and it's
A zero sales event.
it's zero, yeah. So there is no
Yeah,
pitching.
absolutely. And I'll just say, just kind of adding on to the no pitching. Some of our top investors are going to this event, so they've already invested in alternatives and are doing other things. So really, if you want to hear from another peer group, and what they're doing, it's good for that. But also, I want to point out that there's 9 speakers and 50 seats. So I mean, that's almost a one, and that's a very, very good ratio of
Right.
speaker to of attendees. So when you talk about a mastermind, I mean, there's going to be so many opportunities in the extracurricular activities that we have planned for fun, but then also the 2-day event where we're going through and listening to the speakers, and then having breakout sessions and kind of really diving deep on different topics.
Share some of the topics that will be discussed.
Yeah, and I'm actually speaking, and one thing
Yep.
I'm opening, and so I'll jump in there. I'm actually
Yeah.
pretty excited to share. So if you want to come meet me and have a conversation, I'll be there, and talking about economics. And what my passion is, having gone through 2 giant super cycles in investing, is to understand the super cycles, and it's a whole lot easier to be successful when you know the big tides of the economy and where they're going. So you actually can predict what's going to happen, because the big tides are very predictable. Of demographics and geopolitics are very predictable. So I'm going to highlight some of the big investable megatrends, and where we're seeing the economics and where we're seeing the opportunities. And then so tell
Yeah.
us about some of the other speakers.
Yeah, some of the other speakers. So we have Toby Mathis, who's going to give you tax strategies. So if you're an active real estate investor and you're doing some syndications here and there, and you want to know kind of the best ways to position yourself for success in tax strategy, you're going to get that. Plus, or if you're planning on a big exit, like Bob was mentioning earlier, with your business, you're going to have the opportunity to talk about the best ways to strategize paying less taxes. It's not necessarily what you earn, it's what you keep. And the tax strategy is a big part of that. Basics about an advanced strategy on asset protection. We're going to have Clint Koons from Anderson Advisors come and talk about asset protection strategies, and you'll be able to mingle and network with Clint
That's
for the
super interesting. Yeah.
Yeah, and then we'll have a business strategist who's advised multiple billion-dollar companies for success, and he's going to come in and do a workshop on kind of laying out strategies for positioning your business for success and really getting dialed in on strategy. I think one of the things that a lot of people ask me when, hey, how did you guys organize your company, and how did you grow and really get your culture and devise a strategy? A lot of it's come from having a business strategist. And so Ron LaPointe's coming,
Mhm.
who's going to talk about how he's done that for us and how he can help tailor a
Wow,
plan
cool.
for other people. We have Vicky Schiff coming in again. I mentioned she started Mosaic Capital. We are $3 billion in originations. Over the course, she sold her company, had a huge exit. So she's going to talk about everything that she went through in that, and kind of some strategies surrounding
How to
sort of
do a good exit in your business, and transition. That's interesting. So
yeah. And then we even have some of the more soft touch stuff. Rich Fetke, who just wrote the book The Wise Investor, is coming. He's going to talk about kind of a balanced um, wheel of your investment cycle, right? So it's not just about making as much money as you possibly can. You want to be able to enjoy it. And so some of the aspects and elements behind really kind of setting yourself up for overall life success, not necessarily just in your business or just in your financial success. The Spartan team will be there. The chief officers of Spartan Investment Group, our CEO, CFO, myself. We'll hear from Ben Lapidus
I
about
love
different.
Ben.
He's going to be moderating the events and really kind of just tying it all together, which I think is what he does best. Is kind of
Yeah, he
contextualize
does.
one speaker to the next, but also talk about underwriting and financial analysis during this uncertain time, and really just kind of having access to different things that what he's thinking about for underwriting and forecasting in this uncertain time. So I think it's a stacked deck of speakers and a really awesome location. So really looking forward to it. Yeah.
I mean,
And a seaplane.
and a
And a
seaplane.
seaplane.
Hopefully, fingers crossed.
And water
Yeah,
in the lake still. Yeah.
Yeah, you're on the podcast, Ryan, here, so there's a lot of accountability if it doesn't happen. But
All right, I'll have to
No, I
get
mean,
my
it-
seaplane rating before the conference. So.
yeah. I mean, it really sounds like, for investors that are, either owning a business and looking to exit and sell at a certain point, or have recently sold a business, have exited, have had a windfall of cash liquidity event. They're going to be really benefiting from a lot of these speakers, and getting around other like-minded people that are in a similar position. Would you say that's kind of going to be who's going to benefit the most from this?
Yeah, that would be, I would say, one category of, that's a perfect fit. And then I think the other category is, you're want to eventually get to that point in your business, right? You want to get to the point where it's able to be sold.
Exitable. Yeah.
Yeah, and there's things that you need to be thinking about today and setting yourself up structurally to be successful in that moment, right? And it might be years from now, or it might be just right around the corner. So I think it's perfect for that. And then lastly, I think it's always going to be beneficial for the real estate investor who, like you said at the beginning, is really hands-on and active in real estate. They might not be going and doing the physical work on the property, but kind of a full-time passive investor or transitioning to one and looking to kind of set up how they do their investment strategy, I think is going to be really, really beneficial to that person.
Awesome. Well, Ryan, we're excited to come out and hang out with you, and anyone, open invitation if you want to come join us. So sounds like it's going to be a blast.
So just 50 seats, huh?
But there's been a ton of interest, which has been great. And, we're looking forward to seeing you there. And, Ben, I think you're going to put everything in the show notes. If somebody's interested and wants to register, I know that we're opening up a few spots for Aspen and Invest Like a Billionaire listeners. So it'll be in the show notes.
Definitely click that link if you're interested to get more information on all the details. And Ryan, always a pleasure to chat and connect. Thanks so much for coming
Come
on.
and see us in the beautiful Lake Tahoe.
Yeah.
Yeah.
Thanks so much, Ryan.
Thanks, guys.
Awesome. Well, that sounds fun. I'm already wanting to go right now.
Definitely me.
Yeah. Lake Tahoe sounds great from this humidity and heat here in Kansas City. But if you guys sounds interesting to you, please click on the link, find some more information about the event. We'll be there in person. It's going to be a really fun time. Get to hang with us and the other folks at Spartan and the other speakers. And, as always, we like to encourage you to sign up for our Investor Club list. So if you are enjoying these episodes and getting value from them, you can kind of go one step further and join the Investor Club. It's on our offerings page.
Access to our deal flow.
Access to our deal flow on aspenfunds.us. So sign up there to get information and exclusive offerings on the deals that we're putting out. And until next time, thanks for listening.